My brand new trading ideas for both Bitcoin and INJ for today. I am not going to waste any of your time and we are going to dive straight into the first trading idea, which is for Bitcoin. First, I'm going over the technical analysis before explaining the statistical confluence for the long setup that I'm looking at for Bitcoin. What we can see over here is that we have a beautiful range, right? With the range high over here and the range low over here. We have a very strong range in which we so far have seen a deviation above the range high that led to an impulse towards the range low liquidity pool. We saw a first tiny sweep, but we know that a sweep is not enough to really mitigate that range low liquidity pool. Eventually we went beneath the range low, deviated, reclaimed the range low right over here, and right now we know that after a deviation of the range low, technically speaking, the first major objective should be the mid-range, which we can find over here. And what is really nice about this mid-range is that if we zoom in, is that we can see that we have this draw on liquidity. Why do we have this draw on liquidity? First off, we have this important high over here aligning around the mid-range, and on the 4-hourly time frame we can see that we have this wick, and we know that these wicks, they tend to be a draw on liquidity. And if we mark out that 50% wick fill level over here, we can see that we have not filled 50% of that wick yet. So we can see that we have a reclaim of the range low and a clear draw on liquidity towards the mid-range. And also if we go to the 1-hourly time frame, we can see that around that range high is where we have this previous drop off as well, which will act as another draw on liquidity. So we have two major draws on liquidity, we have a deviation confirmed below the range low, so we should be moving towards the mid-range and towards the range high. Now what we can see over here is that we have some very interesting price action, right? So we have the range confluence, but let's look at this price action and liquidity that are confirming our bias and thesis to look for potential longs. Now first off, let's look at this previous price action over here, because we can see that we were forming a bit of a range right over here, right? And we can see that after sweeping the range low over here, we got a bit of a bounce towards the upside. And if we in that case go towards a 15-minute time frame, we can see that this bounce towards the upside gave us a lot of fake break of structures across the board. And we know that these fake break of structures, what are they doing? They are engineering liquidity to the downside. Now how does that happen? It happens because people, and especially the retail traders, so the traders that in my opinion aren't profitable yet, and the traders that in my opinion aren't able to really identify market structure, they don't identify this as a fake break of structure. So what do? They start longing the price of Bitcoin, right? Because they think, okay, we are breaking structure back towards the upside. The price should reverse from here. Let me hop into longs. So what do? They break out long the price of Bitcoin over here. Or for example, they pull back long the price of Bitcoin over here. Now, where are these people going to place their stop loss? Exactly, they're going to place their stop loss beneath the low that we formed over here. And this is why this aggressive push to the downside is such a clean mitigation of the liquidity pool that we engineered over here because of the fake break of structure that were taking place right over here. Now what we can also see is that over here this high brings us to a lower low over here compared to this low that brought us to that high, making that high a significant high to break. So the impulse that we saw after mitigating that liquidity pool over here and filling the orders of smart money broke structure back towards the upside, which means that the low over here that we formed while mitigating that liquidity pool makes up for a very clean invalidation for our bullish thesis. So that way, by identifying the liquidity, the market structure and the range, because if I reapply that range low that I just hit, we can see that after reapplying that invalidation also aligns below that range low, and we obviously want to hold on to the range low no matter what. We have found ourselves a very clean invalidation, aka a very clean stop loss right over here by identifying the previous price action that was taking place right over here. Now when we analyze the price action that was taking place after this impulse to the upside and this break of structure, we can see that we were once again putting in a lot of break of structures. Are these valid break of structures? No. Why is this break of structure over here not valid? Because the high that we break over here is not a significant high to break. Why is it not a significant high to break? Because the high over here only brought us to a higher low and not to a lower low compared to this low that brought us to this high. And then once more over here we see another fake break of structure across the board, right? And what are these fake break of structures doing? Engineering liquidity beneath this low and also beneath this low over here, because the people that are longing inside of this consolidation phase over here, they're placing their stop loss beneath these two lows over here. Because if you long the price of Bitcoin over here, for example, and you place your stop loss all the way beneath this low, it's not going to be worth the RR towards that range high, right? Because in that case, the RR is only 1.64. Now, if we use instead the lows over here, we can see that the RR increases swiftly towards 4.42. And because of that reason, the liquidity is aligning beneath these two lows over here. Now we know that we always want to enter where other people are getting stopped out. You don't want to get caught up in this choppy price action, in this choppy range that we can see over here. Instead, what you want to do when you see a consolidation phase like this, look at the extremes of the range, and that's where we are going to position ourselves, right? Now we know that we have this low where there's a lot of liquidity, and right beneath the low is where we have this previous supply area that led to this impulse to the downside, which means that this previous supply should now be turning into demand. Why? Because we invalidated that supply with these two strong bullish candlesticks, which means that this is turning into a breaker block. And that breaker block in that case is aligning right beneath this inducement, which means that this is a high probability breaker block. First entry is over here. Where is our invalidation? Beneath the local low. Our targets are indeed the mid-range liquidity pool and especially that range high liquidity pool right over here. And then I also have a second entry for this particular setup. If we quickly remove the drawings right over here, right, we can see that Bitcoin put in a major wick to the downside right over here on a daily time frame. Once again, we know that quite often these wicks, they tend to get filled for 50%. If I mark out at 50% level, right, and I go back to the chart, what can we see? And I reapply the setup right over here, is that 50% wick fill level makes up for a very nice second DCA entry point with the same invalidation right over here beneath that same low and the same targets, aka the mid-range and the range high liquidity pool. What we can see over here is the weekly timing statistics for Bitcoin. We know that we formed the low of the week currently on Monday, which means that according to the statistics so far, that Monday low has an 86.4% chance to hold. We formed the weekly high yesterday on Thursday, and we can see that weekly high only has a 19.8% chance to hold, and that there's a 30% chance to form it on Friday, aka today, a 19% chance to form it on Saturday, aka tomorrow, and a 31.3% chance to form it on Sunday. So the weekly timing statistics are showcasing a very high probability of the current weekly low to hold and a very high probability for the weekly high to be broken, which means that there's a high probability for further bullish displacement towards the upside. The exact same thing goes for the weekly distance statistics. What we can see right over here, guys, is that the distance statistics are showcasing an 87.7% chance of a further displacement compared to the displacement that we have seen so far, right? Which means that there's a 87, almost a 90% chance that we are going to get a bigger move compared to the move that we have seen so far this week, which means that there's an almost 90% chance to get a new weekly high this week, which is obviously giving us a major edge that there's a high probability to form a new weekly high, both on the timing statistics and also based on the distance statistics. So not only our technical analysis is pointing towards more upside, hopefully after first some more downside to fill our orders, of course, but also the weekly timing and distance statistics are also showcasing a very high probability of further bullish continuation for the rest of the week. Okay guys, the video is taking a little too long. I was going too much into detail for this Bitcoin setup, which is why I don't have the time to also explain the INJ long. But obviously, as you guys can see on the screen right over here, I'm going to give you guys a little bit of a sneak peek of what the INJ long looks like. But if you really want to find out what the exact INJ long setup looks like, you have to join the Discord server. You can find the free link to our free server in the description down below. I will see you guys there. Have a lovely Friday, have a lovely weekend, and let's see if we can make some money. Ciao, ciao.